All right. Thank you so much, Anna, for coming. I really wanted to talk to you and to talk a little bit more about the Atlantico team, about Latin America and how it's growing. I'm Brazilian, you're Brazilian too. We're speaking English here, which I think it's funny. Um, can you describe a little bit more about, Latin America and maybe make a little bit of an introduction of Atlantico and talk about the Latin America opportunity in terms of numbers and how big the market is globally?
Yeah, of course. And thank you so much for having me. I think I'm always very, very happy to talk a little bit more about Latin America, especially to a more international audience. I think it's a region that since 2018 started getting a little bit more attention and well-deserved attention from investors worldwide. But I think there's still kind of a big job whose burden I think falls on us that are kind of on the ground in the ecosystem here to spread the word about what's happening in the region, the good, the bad, and the ugly, but mostly all of the growth that we've been seeing in the past few years. So it's really great to be here. And to just to start and tell you a bit more about me and about Atlantico. So I'm a partner here at Atlantico. We're an early stage fund based out of São Paulo, but investing across Latin America. We're actually a pretty new fund. We started back in 2020, so beginning of 2020 with the approach of investing in companies in the region that we believe are showing those first kind of early signs of product market fit. That ends up translating usually to a Series A. That's our sweet spot. We've done a few kind of Series Bs in the past, always very sector agnostic. I think we're trying to find the founders who are building the future wherever they are. So we're investing on everything across fintech, healthcare, education, retail, e-commerce. I mean, any sector that you can name, I think we've seen or we've done an investment in. And we were born with this approach of being kind of entrepreneur first. I'm actually the only partner here at the fund who hasn't actually built a company before. So all of my partners here are former entrepreneurs, former operators. I feel really lucky to learn from them. And so with this in mind, we have a very boutique approach, kind of concentrated portfolio, hoping to bring a little bit of that operational expertise to the table. So that's a little bit of what we do. And I think to start talking a little bit about Latin America, I think the important context here is both myself and Julio, who's the managing partner here at Atlantico, decided to move back and become investors in Latin America full time. Julio started investing here much earlier than I did, so a little bit over a decade ago. I moved down here back in 2021, but started kind of working with entrepreneurs and investors in the region back in 2018. And the big reason for that is I think when we started seeing both the amount of financial and human capital being the most important of the two, that was flowing into Latin America and that was growing in Latin America, starting in 2018 when we had our first kind of big tech IPOs with Stone, PagSeguro, and all of the favorable regulation that were helping push these first big tech companies forward. We got really excited. We saw it as kind of an inflection point for the region, and I think a lot of other investors and entrepreneurs kind of followed that same trend. And I think kind of going back to the basics, Latin America as a continent is one of the biggest economies in the world. We have over 600 million people, 6 trillion in GDP. If we were one country, we would be the third largest economy in the world. And I think a lot of people talk about Latin America almost as if it was one country, because a lot of the companies here, especially when they start in smaller markets such as Chile and Argentina, they start with a mindset of expanding regionally. And not to say that that is, simple or easy, but it's an opportunity that you have in Latin America, given kind of the ease in language across regions, the similarities in cultures across certain countries. And so a lot of the big companies we see here are in some way, shape, or form pan-regional. And so that's a really exciting opportunity for us. And we actually got in touch because of the report that we publish every year, which is the Latin America Digital Report. For anyone that's interested, you can find that on our website. And we always start with this big kind of socioeconomic overview of Latin America to kind of let people know how big this economy is, how much opportunity it has. And a big focus this year was also to talk a little bit about why we think Latin America is the engine of the world. So the things that Latin America has as an economy that we think are quite special. And those things range from the trade and how trade has been increasing in Latin America. There's a big kind of nearshoring component that has started in Mexico. China, both China and the US have increased their trade volumes to Latin America. I think our neutrality kind of benefited us in that way in terms of this kind of geopolitical and economic impasse that China and the US have been having over the past couple of years. And we're an economy that's very fueled by commodities, right? Which in times like this, where the market is very volatile, both protects us, but also when we look into the future and think about the types of things we're going to need to scale food to a global population that's always rising, the type of minerals and metals that we'll need for the green energy transition. Latin America is also one of the biggest reserves in the world for these types of commodities. So these are all like basic facts about the economy that maybe fewer people know than should know about, and that got us excited about the region.
That's awesome. Yeah. I'm very impressed. I went to a conference this year, Latin Tech conference in Miami, and I was impressed by the number and the quality of the entrepreneurs. And I mean, you can see it right from the numbers and the results. Like, there's no bank, for example, that's like a huge bank that I think half of Brazil uses their service. And there are companies that not only serve like the region but serve the globe. Like, one big example is Wildlife Studios, which I know the founders. They're like super nice, a super nice company, but it seems like a big opportunity. And so I would like to understand a little bit more about how digital the region is. I've seen numbers that I think the one of the Uber investors was saying that out of the top 3 or 4 cities that were the biggest for Uber, 2 or 3 of them were in Latin America. One was São Paulo, and maybe the other was Mexico City. But I mean, just the sheer size of the cities, right? Like, they're huge cities. But also, it seems that the regions are very digital, right? And they adopt social media and social e-commerce. They've been adopting e-commerce. So can you give us a sense of how big digitally this region is?
Yeah, and you're right. Actually, one of our partners here at Atlantico is Gitelis. So he was the CEO of Uber and the person who brought Uber to Brazil. And him and his team, they scaled São Paulo to be both Uber's biggest city, but also Uber's most profitable city. Rio de Janeiro, I think, if I'm not mistaken, is the third most profitable city for Uber. Mexico City was a massive market. And the basis for that is exactly what you said, which is the digital adoption of the population, the willingness of consumers to try new things, to engage with a range of digital products. And when you actually look at the numbers, I think this is something you feel when you live down here in the region, but the numbers kind of back up that assumption. So when we talk about internet penetration, and if you group all of the countries in Latin America together, you have about almost 80% of the population that has access to the internet. To give you a sense, compared to high income countries, that number is on average 90%. So we're very close to developed economies in terms of internet penetration. Brazil is actually 84%, Argentina 87%, Chile 90%. So pretty much at the same level as more developed markets in terms of internet access. And I think the huge shift that we've been seeing, we call it a digital democratization. But if we look from kind of 2015 to now, the growth in digital adoption until 2015, about that time, it was driven by what we call in Brazil Class A and Class B, which is basically the high income population. But if we look at 2015 to now, actually most of the growth in this penetration is coming from class C, D, and E. So basically lower income population. And then that's, we have a very famous, who I'm sure you know, very famous TV presenter and a lot of other things down here in Brazil called Luciano Huck. And he always says the Brazil with the Z and Brazil with an S as we write it. So it's the Brazil with an S where you have a huge number of people accessing the internet and driving that growth going forward. So you've went from a country where digital products were mostly tailored to consumers with high income to a nation that's kind of ready for mass consumer products. And I think you mentioned, Nubank is a big example of that. And when we think about other factors around it, so internet access by itself is useful, but doesn't drive adoption, right? So the other things around that drive adoption is kind of users' interactions with e-commerce, user interactions with digital financial products, users' interactions with social media. And for all purpose and effects, I think Latin America is a leader in all of those. So when we look at, for example, social media, I think Brazil is actually the first or second country in the world with most social media usage. On average, a Brazilian adult spends about 9.3 hours a day on the internet, being 55% of that on mobile. And we are the heaviest users of Instagram. We're the heaviest users of Facebook. We're amongst the heaviest for TikTok. So, I mean, this level of engagement with digital society is something unprecedented in any other region in the world. And e-commerce penetration actually has historically been low, but after the pandemic, we saw a really big change. So what we saw in more developed markets like the US is that the pandemic actually led e-commerce penetration to spike up, right? And we saw a lot of companies betting on that spike being long lasting, companies like Shopify, for example, in the US. But once the pandemic kind of went back to normal, like life went back to normal, a lot of these consumers, they went back to their old ways of doing things, right? So that spike wasn't really permanent. Whereas for countries like Brazil, the pandemic was the first time a lot of consumers, a lot of the population interacted with e-commerce and other digital products, such as digital bank accounts for that matter, for the first time. So unlike the US, where people were doing the 20% of their activities that they used to do in person, they were doing digitally during the pandemic, and then they went back to doing part of that in person. In Brazil, it was a change that there was no going back. You suddenly discovered that there's so many things that you can do online that you had never experienced before, and that change was long lasting. So we started to see kind of this growth in e-commerce penetration when we look at kind of total retail sales that has been long lasting and growing quickly over time. So that's a really exciting thing for anyone that's building a digital product in the region.
That's super interesting. I mean, that's a big difference from here in the US. And it makes sense that now people are more used to e-commerce, they were introduced to it. And I think one big player when we talk about Latin America is Mercado Libre, which was started by our hermanos Argentinians, by Argentinians. The founder lives in, I think, Uruguay. But Mercado Libre seems to be winning, and it's winning even against, big players like Amazon and Walmart and whatnot. And it seems that, the big players in Latin America are either Mercado Libre or even Asian platforms. Like, I think Shopee is one big example. Why? What is Mercado Libre doing so well in Brazil, and why is it winning? And what's going on in terms of the Asian companies entering the Latin American market?
Yeah, I think it's a great question. So I think Mercado Libre is an iconic company for us in Latin America. I think it's the first actually really big venture scale tech company that we saw here in the region. And like you said, I mean, I don't know how much people know the story of Mercado Libre, but I personally find it fascinating. I was talking to someone that one of these days that actually gave me a firsthand version of the story, and I loved it. Mercado Libre actually started back in 1999, right? So over 2 decades ago. And it started alongside another really big player at the time called Derramate in Argentina. And that player was actually bigger than Mercado Libre for the first 3 years of operation, had more market share, more users, like higher GMV. And in 2001, eBay bought a 20% stake in Mercado Libre. And that completely changed the game. So once Mercado Libre gained access to the eBay technology, they sped forward kind of years ahead of any other competitors. And they not only acquired Derramate, but they also acquired a lot of other competitors, even kind of media players in the region. And that's when they really started to dominate e-commerce in Argentina. And eventually, I mean, you know the story, Mercado Libre is a multi-billion-dollar company, publicly listed. They expanded across Latin America, and they created moats that are really high barriers to entry to any other player trying to play in the region. I think everyone's familiar with the Amazon model, right? You have massive network effects that create a barrier to entry over time. Mercado Libre, much like Amazon, built a huge logistics infrastructure. So their version of FBA, right, which is very prevalent in the US, they built it across Latin America. That's a huge barrier to entry, extremely capital intensive business, very, very hard to build that logistics network, both in-house, but also all the other kind of third-party logistics partners that you have to enlist and negotiate with and price. So they were able to create a really kind of eternal company in Latin America. And each time that there was a big innovation in the market, I think Mercado Libre was very quick to adapt. So when we think about fintech products, for example, Mercado Pago is one of the most used wallets in Spanish-speaking Latin America. It's a digital wallet where people make payments within Mercado Libre, but also outside of Mercado Libre. I mean, if you've ever been to Argentina, for example, everywhere you go, like Mercado Pago is accepted at any kind of corner shop that you go to. So they were able to kind of start dominating that payments play as a marketplace. In other countries like Mexico and Colombia, they don't have a license to operate across other financial services, but payments continues to be big. And they've also started giving credit to both suppliers and users. So they built really this impressive ecosystem whose growth just compounded over time, creating huge barriers to entry to new players. But when we kind of go back and then to your question around new players like Shopee and Shein actually over the course of this year gained a crazy amount of market share. I think no one was expecting that from them here in Latin America, but it was really impressive to see. So if we go back to kind of 2021, when these players were first coming into the market, really investing a lot of money into the region, what happened there? My hypothesis is that when we talked about the digital democratization, we're talking about internet access, right? We're talking about this range of consumers in the lower income classes that previously didn't experience any digital services such as e-commerce, right? And these consumers are extremely sensitive to price. So there's a whole discussion that I won't get into in terms of how Shopee and Shein pay taxes in Brazil and in other countries in Latin America. I think if anyone's interested in that big debate, there's a lot of stuff online on that. But the fact of the matter is that the fact that they are price sensitive and they offer goods for sometimes half, sometimes 20% lower, sometimes 10% lower than the goods that you usually find on Mercado Libre, allow them to gain market share extremely quickly. And so Shein actually reached what Mercado Libre took 5 or 6 years to reach in terms of market share in a year, right? And so Mercado Libre is definitely still the dominant player in the region. Here in Brazil, it's definitely the dominant player. I think it has around like 35% market share when we think about share of views, not share of GMV. I think share of GMV is much bigger given their average ticket's much higher. Definitely still the dominant player, but players like Shein and Shopee are quickly gaining ground.
That's amazing. That's very interesting. Um, I think I saw a video of someone I posted online and got a little bit of traction that they were using Mercado Pago to pay coffee, and I think they were, underneath they were using stable coins, and that's something that I kind of post a lot online about stable coins, how I think they're going to be very, very important. And we see in some cases, because the conversion rate may be different, especially in Argentina, because they have a weird market there. If you have a conversion rate with stable coins, it can be more efficient and it can be cheaper. And so it's interesting that, with Mercado Pago, like Mercado Libre it seems very aggressive and very focused on, making investments and not letting it go, meaning they're investing in new areas with payments and things like that. So it's super, super interesting to watch. You mentioned, Mercado Libre was the first big breakout company, but we've seen a bunch of breakout companies, and some of them are being listed in American exchanges. I've seen that more and more so. But you also mentioned the size of the economy, right? It's like a huge economy. So it would be interesting to learn a little bit more about how is the Latin VC investment, like how, like if, there's a lot of investment in the area and the returns compared to other regions, because if we have like a big population in Latin and, it's just started, means that the ecosystem is not as big. So it might be like a good place to look at, right?
Yeah, I think it's a great question. So I think kind of stepping back, if you go back to kind of 2010, 2011, I was not working in venture capital back then. I wasn't working at all back then. And I wasn't here in the region. But if you hear a lot of the stories of like these early entrepreneurs in Latin America, like my partner Julio with Peixe Urbano, or Ryan, for example, with Viva Real, and you ask them like, hey, who did you fundraise from? Like there were no local funds. I think in Brazil at the time you had Monaxis, who was just starting out, a different kind of type of deal, but first born as a venture fund and starting to explore that ecosystem on the early days. But there was no angel capital, there was no seed stage capital, there was no Series A capital, and so if you were an entrepreneur trying to build a company that has a venture capital model, in the sense that you need to burn quite a bit of money before you actually make a sustainable business model in order to kind of grab market share quickly, grow quickly, et cetera, et cetera. You had to go to players outside of Brazil, right? There was very, very little capital in the region. When we look at 2018 forward, that reality really changed. So by 2019, we had about $1 to $2 billion being invested per quarter by venture capital players in Latin America, which is a massive amount of money for a region like ours, right? And that really, really changed the game. We saw a lot of new funds pop up, including ourselves. We saw a lot of foreign players kind of stepping into the region, everything from traditional early stage funds to crossover funds to growth capital funds. And that created an environment where capital was extremely available, maybe even too available when we look back to 2021, right? And we got at our peak, there was about 5 billion being invested per quarter here by 2021. So think about that. It's like $20 billion a year, whereas a decade ago we had zero. So it's a crazy, crazy change in the ecosystem. And since then, venture funding across the globe has kind of gone down by 50% or so. Latin America was no different. We actually had a little bit of a steeper fall because we had a steeper rise. So it's more volatile. So we actually had from our peak to now, about in the past like year and a half or so, venture funding went down by about 65%. But we're back to 2019 levels where there's $1 billion per quarter still being invested in the region. So when we think about these kind of early stage companies, capital is not as widely available as is in 2021. I think that actually creates for a healthier ecosystem. But it's not a barrier, at least in my view. I'm sure there are people that think about this differently, but at least in my view, I think the good companies and good tech companies here in the region definitely have enough pockets of capital to access. But what I think is most interesting is what Latin America has done with all this capital since it first started being invested in the region, right? So when we compare Latin America to other emerging markets, so I think when you think about the emerging market pocket for any type of financial institution, that usually has Latin America, India, Southeast Asia. These are kind of our closest comps, right? So if we compare Latin America to India, and we look at VC investment in the region from 2017 to 2022, in Latin America, that was about 0.02% of our GDP back in 2017. And in India, that was about 0.5%. So in Latin America was an order of magnitude lower by all means. But what we've done with that capital since then is really impressive. So we've had 12 total exits over $1 billion in the past 6 years. And we've generated over $82 billion in market cap from these tech companies going public. 41 billion of which came from Nubank, followed by a lot of, really big breakout companies, PagSeguro, Stone, Alt0, dLocal. So we've learned how to do more with less. So I think a big question that I get both from kind of LPs of ours outside of the region, entrepreneurs and investors who are starting to look in the region is, do we have a problem here with growth capital? Do we have a problem here with liquidity? What are the different paths to exit for these companies if they do succeed? And my take on all of this is that, we've had breakout companies that started in 2013 when there was zero capital in the region, and that just created $41 billion of value. Today, we're in a much better state. So I think there's enough for us to reasonably expect that these outsized exits and returns are only going to continue. And even if you take a step back and you see that evolution when we look at the public markets, we usually do what we call our digital transformation index, which is we get all of the companies publicly listed, headquartered in Latin America, and we divide their market cap by the total value of the region's GDP. And today we're at about 2.5% in Latin America compared to, I think, 8% in India. I don't want to give you the wrong number, 11% in India. And so if we believe that we can get to the same tech penetration as India, which is a country that has, less GDP per capita, is less developed than Brazil or Mexico, for example, we're talking about generating in the next 1, 2, 3 decades, nearly $1 trillion in value through technology. So I think we've demonstrated that we can do more with less in the past. Now we can do more with more, and I think there's a lot of road to tread going ahead.
That's really interesting, and the comparison to India, I think it's really telling because a lot of the discussion that I see online is, oh, India is like the future, or this country is the future, and it's true. These regions are growing, but if you look at the dollars invested and the returns, Latin America seems like the one of the most obvious areas to look at, because the region has so much GDP, is generating so much wealth, and at the same time, the investments are not on par to other regions. So it just seems like an obvious region to invest. And I mean, the numbers already show, right? As you mentioned, with all the market cap that was generated, and with the 12 unicorns this past 6 years, and that's just going to grow. So you talked a little bit about, payments, and that's a very interesting area, and that's being developed in LATAM. I mean, there is Pix that was created in Brazil and has been growing considerably in the country. Other regions, Mexico, tried their own system. I think Pix, it's similar to UPI. I think that's the name that was implemented in India, but it looks like a big win, and it seems that's pulling the region forward a lot. Can you talk a little bit more about what is Pix? How does it work? Like how big is it, and how is it transforming the region?
Yeah, I mean, this is one of my favorite topics because I honestly think it is crazy impressive what the Brazilian Central Bank has done here. They've basically taken $10 million of investment and they've transformed the entire financial inclusion landscape of the country, and of a massive country, by the way. Like, I think this is the most successful real-time payments solution that has ever been implemented in the world. Even when we compare it to UPI, so just to give you a sense, you're completely right. I think UPI was the biggest success case in the world before Pix. So UPI is the real payment system in India. And it took Pix a little more than 13 months to reach UPI's current level in terms of number of transactions. And if we look at Pix today, when you and we think about monthly transactions per capita, it's over 2 times that of India's UPI. So UPI, don't get me wrong, massive success case. But just putting it in comparison here, just to make sure that I get this message out that it's something really incredibly impressive. So I think this, since the launch of Pix in November 19, we saw a transformation in the economy that was unprecedented. So digital payments really took over. People use Pix more frequently than they use credit cards, more frequently than they use cash. About 50% of the population uses Pix on a daily basis. So if you go out here in Brazil and you go to someone who's selling fruit in the street, they'll have both a card machine and Pix. And rarely people will pay with cash anymore. And when you think about what that does to an economy, it's really transformational, because yeah, this is great for the consumer. Of course, it's easier for the consumer to transact. It's cheaper for the consumer to transact. It's great for the merchant because it gives them an option here in Brazil. Very differently from other countries in the world, if a merchant is paid by their consumer with card, they only receive that payment in D+30, right? So Pix gives the merchant an alternative to receive that immediately, an alternative that is not cash and that is easily reconciled for them, and that they can easily keep track of, etc. So it's great in terms of usability and comfort and efficiency. But that's not the real impact of a real-time digital payment system that goes well. The real impact of that is that digital payments is really correlated with labor informality and with access to credit. So when digital payments goes up, adoption of digital payments goes up, labor formality also goes up, and access to credit also goes up, because you suddenly have history on so many consumers that before didn't have a credit history. You suddenly have a formality in terms of how these people get paid, if they're freelancers, if they're sellers, that allows them to access a range of financial services that they couldn't access before. So it's really transformational for the economy. And that has all been done, which I think is also important to mention. Like, the Central Bank of Brazil is, unlike many other countries in the world, it acts as an independent body. And in the same time that it was launching Pix back in 2019, it launched an entire open banking agenda that was very ambitious and also very successfully implemented here. So it basically allowed financial institutions to start sharing customer data amongst them, and it allowed consumers to access services such as payments and credits outside the channels of their financial institutions. So this increased competitiveness when we think about the fintech and the financial services landscape in a way that was also unprecedented. So if you look at kind of banking concentration in Brazil, which was actually one of the reasons kind of Nubank started and why it was successful, that has gone down significantly, both since 2015. It was kind of going down slowly. Nubank was taking share. Some of the first digital banks here, like Inter, were taking share. But if you look at 2019 forward, that concentration falls steeply. So it was very successfully implemented and really impressive. And it's starting to give rise to all kinds of very interesting business models that it's kind of our jobs as investors to try to find those opportunities.
That's super interesting. Yeah, it's great to see more competition in Brazil,
Yeah.
especially for banks. It's always good for consumers, and Pix is a big success. And I think the Fed has been trying to copy it, or like trying to do like real time payments. They introduced Fed now, but it hasn't like I I mean I haven't seen it as well as Pix, but I mean it takes some time for these real time payments to get adopted. But Pix is definitely a big success story for Brazil.
Yeah, I actually, I don't know if it's a matter of time. I think it's a matter of how you launch it. It's almost kind of against time. I think the reason why, for me at least, from my point of view, Pix was really successful here is that one, you had really high banking concentration. So you had to only convince kind of basically 5 banks to adopt Pix as a solution for you to reach like 80% of the population, right? And the central bank made it mandatory for banks to adopt that solution. Because if you think about it, there's no incentive for banks to adopt that solution, right? You're basically giving up a transaction fee that you used to get through here in Brazil, like TED or Boletos, but in the US, like Wires or ACH. You're giving up a portion of those revenues and you're implementing a free payment system, right? There's, of course, kind of, you can explain to them that there's a benefit, you're going to acquire more customers, people are going to transact more often, but really, like, they're looking at like this year's P&L and how they're going to be valued by investors. So there's no like real incentive. And I think the fact that the central bank made it mandatory and created this alongside banks and engaged them early on in the process really made it a massive difference. I think it's a completely different challenge in the US where bank fragmentation is, much higher. Where the central bank hasn't really made it mandatory, so you have to create a lot of different incentives, and I think that ends up taking time, and that's not really a good thing to take time, right? And so
Yeah,
I don't know if it's a matter of time, but I think it's a matter of strategy in terms of how you implement it.
interesting. I didn't know those details of making sure that banks implement it. So we're talking about banks. Let's switch a little bit about one of the winning stories of Brazil, and that's Nubank. Nubank has grown so successfully, has so many consumers inside Brazil. I think one of the founders is similar to you that went to Stanford. If I'm not mistaken, he was at Sequoia when he started with a few other folks. Nubank. Um, why is Nubank such a success inside Brazil? And are there other examples similar to Nubank that may have not gone public but are similar in the size of the market and how well they are doing, similar to Nubank?
Yeah, definitely. Well, as successful as I don't think so, but I think you're right in that Nubank is a huge success story for us, and it's always it's hard to say why a company was successful and kind of pinpoint that one thing they did well. But in the case of Nubank, from my point of view, I think there are a few things that they got right from the very beginning, and then there were a few things which, for me, I think it's even more impressive that they got right more towards the middle of their journey as you were moving towards kind of pre-IPO Nubank, which is what we saw a couple of years ago. So when we go back to when Nubank started, I think they started back in 2013, right? Regulation in Brazil was starting to change. So the regulation around payments changed, which allowed you to operate as a payments provider. I don't know how to translate the term in English, but basically you are now allowed to operate as a financial institution without having a fully banked license. And that gave rise to quite a few different fintechs. You were allowed to give credit without taking deposits, for example. It's a whole different type of license. So regulation in Brazil was changing. It was favorable for new players. You had a lot of problems with the market. You had bank concentration being really high, but you also had a lot of opportunity. When you think about credit in Brazil, it's one of the most profitable countries in the world, if not the most profitable country in the world. And people will never really know why that is. I was actually having this conversation today. Like the net yield here in Brazil is incredibly high for credit, which is obviously not great for the consumer. But even though the cost of capital is higher, the revenue, the interest rates that you can charge from the consumer are also much higher. Part of that because of an asymmetry in information, but part of that also because Brazilian people have been used to the concept of credit for decades now. And so, for those of you who don't know, like interest-free installments, for example, in Brazil, is massively popular and has been since before the 90s. So people are very used to that concept of credit, are more willing to pay in order to have credit. So you had this kind of dichotomy of a market where you have a massive market, favorable regulation coming out, huge banking concentration, which kind of deterred a lot of other players from starting, but also created a big problem to solve because the consumer experience was obviously not great. And then you had this big profit pool with credit that you didn't have anywhere in the world. And so what Nubank did that I thought was, really ingenious was that they created one product that was their way in, which was a free credit card. So people used to have to pay like, I don't know, like 60 reais, I don't know, $20, $10, like to have access to a credit card. They needed to pay like account maintenance fees. So it wasn't free to have a bank account. It wasn't free to have a credit card. And Nubank said, well, everyone in Brazil wants a credit card. I'm going to give them this credit card for free. And I am going to make the best product that I can make for these users once they have a free credit card for them to stick with me. And they created this kind of distribution mechanism that was really also very smart. So they started with a waiting list. So Nubank had a massive waiting list. They wouldn't let anyone in. For you to get into Nubank, you had to be referred by a friend, and that's how they started. They didn't give you any difference in interest rates. They would charge the same interest rate as average banks because they didn't want you using their credit card to pay off your debt from other banks and just to be one of the credit cards in your multitude of credit cards. By the way, this year, like the number of credit cards in Brazil surpassed the Brazilian population, and that's a whole other problem. But they wanted you to stay for the product. So they created like a dynamic credit model where they would give you a very small limit on your credit card, and this limit would adjust over time. So if you actually go into Reclame Aqui, which is our kind of website where everyone complains about any product that you use, the only complaint about Nubank is that your credit limit is too low, which is actually a great thing. It means they're being very disciplined with credit, right? So what they did was they created a credit product where people weren't coming for the credit. So they actually achieved real product market fit by offering an experience to the consumer that they hadn't ever had before. The credit card was a wedge in, right? And if you look at their numbers, I think their CAC, and it still is about that much. It was $5 per user, which is like an extremely low CAC for a consumer product. So they did that extremely well. Once people started adopting Nubank, you had this like flywheel of referral, like organic growth started going off the roof. But really what like led their growth, in my personal opinion, it'd be great to ask someone from Nubank on this, and maybe they have a different opinion from mine. But what really led their growth was just the quality of the product and the quality of the experience. Because if you look at digital banks elsewhere in the world, like in India and Southeast Asia, for example, a lot of them grew on the basis of lower interest rates, higher cash back, like, oh, we can underwrite better for one reason or another, so we can offer you better terms. And they grew, but they weren't crazy successful because they were another source of credit for the consumer. Whereas Nubank was a beloved product that gave credit. And it's harder to actually explain that to investors abroad. I think that's why like a lot of people never invested in Nubank back in the day, because they were like, how are you going to get consumers if you're, charging the same as everyone else? And so I thought that was really, really smart. And I think as they grew, what they did really well is they really took the time to get to know their consumers. So they only started like offering new products to their consumers once they knew how much limit to give to these consumers. They built an incredible credit engine. They have one of the best risk teams in the world, kind of former Capital One guys who built this really well in the US. And then they started offering deposits, and that was their second most popular product. Cost of capital suddenly went down. Their interest rates on the credit cards became even more profitable. Moved on to personal loans, moved on to investments, moved on to marketplace. So they actually built a suite of products where the cross sell was quite high, and they didn't cross sell well in all of those. Like the fee based stuff didn't go as well, but they were really able to become the primary bank account for the consumer, which is something that no digital bank has done at this scale before. So I think that's my take or how I would relate the Nubank success story.
Yeah, what an amazing story it is. It's so impressive to see, and the wedge that they use, um, it's really, really impressive. One of the most impressive stories in the globe. Um, so, I mean, we talked about Pix a little bit, and there are some other companies. You talked about installments, and maybe even Reclam Aqui. Um, and I mean, these are kind of innovations that are in Latin America. Um, are there sort of other innovations or like some of these innovations that are developed in Latin America that you don't see in developed countries that you think are like good opportunities for the globe that you see? Yeah.
Yeah, good question. Um, Look, I think the innovation in financial services was definitely, we would say, carro-chefe in Portuguese. So like what really led the ecosystem forward. Like even today, about 40% of venture dollars flow into fintech companies, or embedded fintech or whatever you want to call it, but a company that monetizes on top of payments or credit, and offers some kind of spin on a traditional financial service. Um, and I think that was definitely the biggest innovation here. And when you think about what the effect of that is on the rest of Latin America, right? Thinking about Pix in Brazil, we're seeing it now in Colombia, for example. The Central Bank of Brazil is working very closely with the Central Bank of Colombia to implement a real-time payment system. In Colombia, we actually have a portfolio company that is kind of surfing that wave of innovation, called Cobre, over there. And then when we look at Mexico, Mexico starting to adapt the real-time payment system that they previously launched that didn't go as well. So you're seeing this type of innovation kind of surface across the region. I think, of course, I mean, anywhere in the world, when we think about the evolution of artificial intelligence in the past few decades, I mean, it's really incredible. And I say the past few decades because it's something that's been evolving slowly since the 1970s, and then suddenly this year you had a huge change into how this works when generative AI came along. And this is obviously not a mechanism of innovation that's coming from Latin America. I think it's actually quite difficult for us to see that level of innovation at the infrastructure level, at the hardware level, or the foundation model level, thinking about Latin America. But when we think about the applications of this in Latin America, I think they might be inspiring to the rest of the world, and they might be different from what people are exploring in more developed economies. We called it in our year in this year's report kind of the great equalizer, because I think the opportunity for us here is to really bridge the access gap when we think about lower income populations. So when you think about education, for example, we all know that one-on-one tutoring is more effective than classroom teaching if you have 30, 40 kids in a classroom. But the problem here in Latin America is that we were way below the OECD average for the number of teachers per students that we have. So we know that this would improve performance, but we don't really have the resources to improve performance. And suddenly comes generative AI, which can actually simulate in some ways. And we're seeing that through companies here in the region like Amira, like Letras, that one-on-one tutoring. Same logic applies to like doctors and healthcare. So we're seeing these new applications that for developing economies specifically, I think can be a really, really big jump in terms of both socioeconomic growth, but also consumer adoption of technology. So maybe that's the one other kind of big innovation that I would mention, even though it's not coming from here, but I just think it will have a big impact over here.
It's definitely going to have a big impact. I mean, yeah, I wrote a book about the AI and the history, and yeah, it's been such a long time, and it's interesting. I was talking, like I was helping a friend that was teaching at like the Stanford Business School, and we basically interviewed a bunch of companies that started radiology AI companies, and a lot of these AI companies were serving the Brazilian market, like hospitals in Brazil, like helping diagnose. So like they would analyze X-rays and things like that, to, for example, diagnose if someone has cancer or something like that. So it's very, very interesting. And I think it can help, because you reduce costs, with tutoring, for example, and it can help a lot. So we'll see how that turns out in
You're
Brazil.
you're gonna have to send me your book. I didn't know you wrote a book about it.
Yeah. I'll send it over. Yeah. So let's switch a little bit more. I mean, we talked a little bit about payments, and that's the last topic about Bitcoin and cryptocurrency in adoption in Latin America. I'm a big Bitcoin fan. I love Bitcoin, and it seems that stablecoins, for example, dollars, are being adopted more and more. So in different countries. So, for example, Argentina, that like most recently is experiencing a lot of inflation, like enormous amounts of inflation. It seems that they are adopting a lot of stable coins, and that's, in cryptocurrencies before. I've heard that a lot of Venezuela, they use Zelle, which is like this Bank of America app to use dollars. But how has it been the adoption of like cryptocurrencies, more specific stable coins and Bitcoin in Latin American countries?
Yeah, look, you probably know more about this than I do, but I'll give you my 2 cents because it's not my area of expertise, but it's definitely something that you don't run away from as a venture investor, and we've seen a lot of interesting use cases down here in the region. So I think if you think about kind of the use of cryptocurrencies in Latin America, I would maybe break it down in kind of into three different use cases. One being kind of store of value, which is more relevant here than in developed parts of the world, right? So exactly as you said, when we think about countries like Argentina, in a more extreme case of Venezuela, that are battling with hyperinflation, with currency devaluation, crypto really holds up as an interesting solution for people to store the value of the money that they earn. So I think if you ask someone who lives in Argentina, there's a 80% chance that they have some form of their earnings in cryptocurrencies. And then the second thing being serving as like a medium of exchange, right? So allowing people in different countries to receive cross-border payments and remittances. For people in the U.S., in Mexico, for example, when you're sending money home to your family, crypto is a really useful and cheap way for you to do that when you compare it to traditional methods of exchange. And in Latin America, where remittances are actually very prevalent and a big part of a lot of business models and banks' revenues, this solution kind of comes in very handy. And I think the last one has just been as a mean of investments. The biggest crypto companies here in the region are exchanges. So if you think about Bitso in Mexico, Mercado Bitcoin, they're the biggest ones in Latin America after Binance, which has been present here in the region since the beginning. So those are the three use cases that I've seen kind of more closely being adopted in large scale here in Latin America. But you mentioned stable coins, and I think it's worth mentioning because when you think about governments in Latin America, they've actually been some of the most receptive in the world in embracing the idea of a central bank digital currency. So back in 2021, like El Salvador was one of the first countries in the world to allow Bitcoin to become a legal tender. When you look at Chile, the Central Bank of Chile started conducting research to launch a CBDC by the end of 2022. So I actually don't know if they did that. I think they're starting to work on the actual project. And when you think about Brazil, which I think is the most kind of advanced in the region in terms of a stable coin, the central bank recently launched the Drex project, which is the Real Digital, so our version of a digital currency here. And they are working very closely with the private sector. They selected 16 kind of companies to develop different use cases for the Real Digital. They're running the pilot on top of that platform for the first time because they do really believe that that can advance the economy here in Brazil, allow for much more complicated financial transactions to be conducted in an easier form. And so we've really seen the government take a stance on this here in Latin America, and it's been really cool to see the innovation that's starting to come out of that. But I think everything is still quite early. I don't know what your take on it is.
No, I just love to see stable coins, and I think I've seen a lot of penetration of stable coins, at least a lot of anecdotes of people using dollars, like digital dollars. In terms of CBDCs, I'm a little bit afraid because it gives a lot of power to governments. But like I really like Bitcoin, and I really think that stablecoins that are basically IOU with specific banks like Circle, and I mean you have so many different options, and they give an option. Like I think stablecoins, specifically dollar adoption, has been growing exponentially in the globe
Yeah.
like crazy, and I think part of it is because there is so much inflation in the globe with other currencies. I mean, the dollar has inflation too, and that's why I like Bitcoin even more than the dollar. But I think for a lot of people, the dollar is still better than what they have, and I think that's one way of saving. And I mean, it's good for the population. I think that they can save and exchanging dollars and whatnot. And another thing, you talked um, um, about borrowing money. I think maybe at some point there will be a big opportunity there because the borrowing costs are very
Hmm.
different for different countries, and it doesn't make much sense, except there's different rules and things like that. But to be such a big difference, it shouldn't be because of the currency that you hold. And if you can hold dollars and borrow in dollars and still pay whatever you own, it seems that prices, like the interest rates would go down for the population. So I hope that that's adopted in Brazil and other countries eventually. And I think it will. I hope it will, because I think it will be a huge unlock for Latin America. So last question. So can you talk a little bit more about Atlantico, the origins, and its investment approach, and maybe a little bit more about you? You didn't talk too much about you, but it would be interesting to know a little bit more, about this.
Yeah, of course. So like I mentioned in the beginning, we started Atlantico with this idea of wanting to bring kind of more operational expertise as an investor to the table for entrepreneurs, and finding kind of the entrepreneurs that are really building kind of the future of Latin America, and being able to partner with them throughout the journey. And I think using that word partner very intentionally, given the length of that journey. And our investment thesis, honestly, there's not much more to it than really identifying the quality of a team and the level of product market fit that they've been able to achieve. I think that that word product market fit can mean different things for different industries and for different companies, right? I think we have made decisions to invest in companies that are really early when you look at revenue, but when you look at other metrics, are showing the signs of product market fit that we expect from them. We've also made the opposite decision of a company that is in the revenue range that we usually invest in, and that is showing revenue growth because of the time that it's been operating or the type of business model it runs. We've also made the decision to wait because we weren't convinced that the company had product market fit despite the revenue, and in some cases we came in a little bit later on. So it's really a matter of kind of building that relationship with the founder and having enough depth on the companies that we look into to build this like high level of conviction around whether or not we believe that they found this product market fit. And of course, whether or not this is a founder and a team that we're really excited to work with and excited to be part of that journey with them. So I think that's kind of all that is to to our investment thesis. And I think the biggest constraint for any investor here in Latin America is market size. So whenever we look at a company, we're always thinking about how big this company can get. And a lot of companies can get big, maybe not venture scale big, but big. And so it's our job to also kind of define what that means for us. But I think the biggest thing that's worth mentioning about Atlantico and what I actually think makes us different is kind of post-investment and how we work with our portfolio companies, which is, as I mentioned, other than kind of our full-time team, we have a network of what we call kind of operating partners who we've picked by hand, trying to find the best people in the world in what they do. So for example, for engineering, we have the former head of engineering at Meta. For growth, we have the former head of growth at Instagram, who's now VP of product at Patreon. So we try to find basically the best people in the world in each area that we know our companies really need help in, and try to support them on that day-to-day and on those operations. So that's what actually makes the job really fun for us, and hopefully creates a great relationship with our companies. And yeah, and as for myself, I've been an investor here since the beginning. So I've joined Atlantico back in 2020, supposedly to be for 3 months. Julie was actually on the board of advisors of a project that I founded back in 2018. That's how we met. And 3 months turned into nearly 4 years. So I've really enjoyed being part of the ride here, and I'm excited for what we're going to be building next.
Awesome. That's great. And I really, really recommend people to check out your digital report. It's amazing, so well written. It's, I think, on atlantico.vc. Where can people find you and find more about Atlantico online?
Yeah, so we actually don't have much information about Atlantico online, but you can go to atlantico.vc to find our digital report. And you can also look me up on LinkedIn, send me a message, especially if you're thinking about building here in Latin America. If you're thinking about investing here in the region, please do shoot a message my way.
All right. Thank you so much for taking the time. Really, really appreciate. I know how busy things can get. It was an amazing conversation. Thank you again.
Thanks, Juliana. It was a pleasure to be here.